to be back. A lot of interesting things happening today. First off, good morning, Mr. Phil, Mr. Nick, Mr. Darrell, and riding the rails. I had never ridden on an Amtrak train before. That was actually pretty awesome. Comfortable seats, very relaxing. I loved it. Me and the boy both loved it. We were looking out the window the whole time. It was cool. All right, so let's go ahead and kind of just take a snapshot, if you will, of what's been happening since last week. There's some kind of developments happening today that are extremely interesting. If you look at what happened all through the week, like let's look at the most actively traded pair, the euro dollar. I mean, since the end of March has been sideways. We've tried to make some plays on the euro dollar in the last several weeks, and they haven't worked out well, and you can kind of see why. Just a lot of sideways movement. Before I left, I said shorting the pound would probably be a good idea, and it was a good idea in those several days on Thursday and Friday. Every time it retraced to 78.6 level, it came back down. So if you did take advantage of any pound weakness, you should have been in pretty good shape. A lot of interesting things happening today on the pound. Before I get into anything here, as I get my kind of bearing straight after looking at the market, there is actually, global markets are up slightly. Futures are up a little bit here. S&P futures are up 10, Dow futures are up 84. Oil's unchanged. I think it's actually slightly higher now since I just wrote this. Development that happened yesterday, the Fed announced a closed meeting for today. Whoa, holy shnikes. There is one trade that I would like to put on here because I think we can hedge on it. Before we get into this is one that I've been kind of looking for this morning. Got to be a little cautious on it, but I do like it if we're going to have a risk on day today. I was waiting for it to see if this could close beneath a new low on the dollar Canadian. And dollar Canadian, you can see there's, it's breaking down. It's gone to a -5 if you're a PitView trader, if you're using the PitView method. I did want to go ahead and put in a trade here, and I can actually do it up here. I wanted to go short on 1 micro on the dollar Canadian. I'm just going to go ahead and go short 1 micro at the market. I like the idea of oil perhaps breaking down a little bit sharper today or coming up today, since we are in kind of more of a risk-on mode in the markets. All the commodity currencies have been looking pretty good, and I've been waiting for this to break into a low. I'm not too worried about the 2,900 level. When you look at the long-term support level right in through here, the next support would be actually, let's see, this low is 29, I guess that's 29106, but right down in here it did break down as low as 28,559. Go to my trade manager here. There we go. Kind of zoom in here. I was looking to see if this could break into a new low. I like the fact that it was looking more bearish, so I put a sell entry in. Sell entry here would be market. I don't think I'm being too terribly aggressive here. Let's see, 29400. I'm going to put my stop at 1.30605. Well, I'm sorry, 30050. 65 pips away. I got in at 29400. I want to put it right above these highs right up in here. Actually, I can put it in at, let's see. Actually, I'm just going to put it in even 30. So 60 pips away. 1.28800. Risking 60 to make 60. I can do that because of the fact that on dollar CAD, The PIP value 7 cents or a little bit below 7 cents now, or above 7 cents. I can actually do this because I know it's 60 pips, but dollar CAD has a lower pip value, and you can see I have my stop right up above these highs. So stop. Go 1 pip above swing high. This is one that I was kind of looking for, waiting for. And then a limit, I'm just putting in at a 1-to-1 risk reward. We've seen some dollar weakening here this morning. If I'm going to go short the dollar, I would rather do it against one of the commodity currencies because they've actually been doing very well. Don't really want to do it versus the euro, versus the Swiss, because those have been doing nothing, or they've been really sideways. Break of recent support. There we go. Okay, so now that I have that in, let me go back up to the news announced today, and then we can kind of slow things down a bit. That is, unless the pound is breaking down, which it's not. So, okay, we can do this now. All right. Pound is another one that I was looking for since it's retraced so much right now. Yesterday, the Fed announced a closed meeting for today. It's an unannounced meeting for the Fed, and the FOMC, as we all know, as of late, has been extremely dovish in their analysis of the U.S. economy. Actually, not really their analysis of the U.S. economy. Their U.S. economy really hasn't been the worry for the Fed. They've mentioned the U.S. dollar being strong several times, but they've also, you can tell by the Fed meeting minutes from last week, that they've actually been more concerned about the global economic outlook. So that's really been one of the things that's been keeping the Fed from being more hawkish on the U.S. economic indicators that have come out that have actually been, better than expected, including non-farm payroll and our inflation and a lot of our inflation numbers. So, with this being said, when you look at the FOMC, the last time they had an unannounced meeting, like a closed meeting, was back in November. Yeah, Daryl, you just stole my thunder. Last time that they did this was back in November before the December rate hike. It's very, it's kind of a telling thing because we've been hearing a lot of Fed speak, just like normal, just like CEOs of a lot of companies. The Fed's kind of been talking out of both ends of their mouths as of late, meaning you've had Fed members that have been coming out and saying, oh, we could raise rates in April. And then you got Yellen saying, with all her concerns over the U.S. economy, she was downright, or the U.S. Forecast, if you will, who was downright pessimistic when she came out and spoke last Monday, if you will. So, when it comes to the Fed having this little unannounced meeting, like I said, the last time they did it was in November before they raised rates. Now, I'm not a conspiracy theory subscriber to most things. Most people that trade Forex, they subscribe to different conspiracy theories, about the market. But if I had to kind of put a little conspiracy spin on this, and you'll just have to follow me here because I think this is kind of interesting, is, okay, the Fed is talking out of both ends of their mouth. What could be their motivation to be really dovish in the FOMC statement when they left rates unchanged, and for Yellen to be dovish? It could surround the U.S. dollar, quite frankly. If the Fed were looking at the possibility of raising rates in April, what they could have done in their last meeting was basically be more dovish intentionally on their outlook, uh, to weaken the dollar, because they know if they raise rates that the dollar is going to go up. So that would leave them some breathing room if they are more dovish in their tone and in their talk. They know that a lot of times the dollar will follow their speak, if you will, and they don't, and they're not lying when they talk about concerns over the global economy and whatnot. So, all of this could be just kind of an easy way for the Fed to get some easing on U.S. dollar strength, meaning, cause some U.S. dollar weakness ahead of the April meeting, because they know if they do raise rates again, that the dollar will strengthen. Now, that's kind of an out there theory, but it kind of makes sense when you think about it. It's like, you know what, let's come out with more of a dovish statement over some concerns over the U.S. economy. We're not really misleading anybody. Get the dollar to weaken a little bit. If we can get the dollar to weaken a little bit ahead of the April meeting, we could go ahead and raise rates again based on the U.S. economic indicators that have been coming out, and that'll give us some room for the dollar to get stronger without it, coming back into more acceptable levels for us. I know that's kind of an out there thing to say, but that, like Daryl said, and like what I just said, last time they had a closed meeting was in November, before the December rate hike. And so this is very interesting. You're not going to hear anything. It's a closed meeting, which means that they're not going to really come out and announce anything based on this meeting. I highly doubt that they were going to come out and surprise the market with a rate hike or anything. So it's just a very interesting thing when it comes to news for today. Other than that news for today, as far as that closed meeting, there's really not anything else to speak of from a news standpoint. If you go in here, close that out real quick. You can see here's the closed meeting right in here. So tentative Fed announcement. I don't know why they put Fed announcement. I mean, they could. This is something. Yeah, I don't know what all could come out of that, but I don't know so much about a Fed announcement. I think it's more of like Fed meeting, if you will. So other than that, there's no real news today to speak of. We have the CPI coming out in Great Britain overnight. Consumer prices are big news when it comes to the British economy. So that's something. They came out at 0.3% last time. They're expecting 0.3% this time. Pound has still been overly weak, even though it's strengthened overnight. Wednesday is going to be a big day because we do have retail sales coming out on Wednesday morning. We have PPI coming out on Wednesday morning, producer price index, inflation number. So the Fed is really looking at inflation pretty, keeping a big eye on inflation. So retail sales and then PPI coming out on Wednesday morning. And then at 10 a.m. on Wednesday, we also have the Bank of Canada interest rate announcement. Last time they left rates unchanged. They've actually had some pretty good economic numbers that have come out as of late. So there's a chance that you could see the Bank of Canada. They're not going to raise rates. I don't think they'll keep them unchanged, but oil prices have been increasing steadily. So I don't think there's any chance of them lowering rates. In fact, Mr. Pelosi could probably even be a little bit more hawkish in his sentiment. Stephen Pelosi, who's the head of the Bank of Canada, he's going to come out and talk at 11:15. There could be a whole lot of volatility on the Canadian dollar, which is one that we've actually been trading more actively lately. Employment numbers coming out of Aussie. I'm just kind of going through and skimming through all the news coming out this week. British pound, you got their interest rate decision coming out on Thursday. People are going to be looking at the votes. They're going to see what we saw back in like September of 2015 was you saw people kind of as the Bank of England, as they become a little bit more hawkish in the economy, oftentimes, even though they're not going to raise interest rates, whenever they get a little bit more hawkish on the economy, you'll see some BOE members actually switch over to voting to raise rates. They will look at that number. If you see any type of number that comes out, I mean, remember, they've had some pretty good inflation data. If you see it come out at like 108, that could be extremely hawkish for the pound. That could send the pound up. If you see any Bank of England members come to the other side of the table and vote to raise rates, remember, they go to the other side of the table not to knowing full well that they're not going to raise rates, but to kind of express their hawkishness for the underlying economic conditions. And then CPI is going to be a big one for the U.S. on Thursday. Consumer prices, those came out, the core consumer prices, excluding food and energy, actually came out way 0.1% above expectations last time. They're still expecting 0.2. All of this could lead into, actually, if these numbers come out good, could lead to some more bullish U.S. It could lead to some acceleration on dollar strength. GDP coming out in China, that's going to be a big one, especially if you're an Aussie or New Zealand dollar trader. And then not much coming out on Friday. University of Michigan consumer sentiment has not been a big driver as of late. So all in all, not a huge amount of news coming out this week. I'm sorry, not a huge amount of news coming out today, but a lot of news coming out this week. So, when it comes to strategies for today, we should probably continue our trend, counter trend, U.S. dollar, or just trading dollar, dollar weakness, strength and weakness on the dollar. One thing I want to add, if we were looking at kind of what drove the markets last week, is the yen. The yen has been driving a lot of strength in the market. Here's something interesting happening on the yen right in through here. This has been a big frustration for the Japanese yen, for the Bank of Japan, I should say, is the fact that the yen has been strengthening so much. You see how much strength has been in the yen right in through here. Wednesday, we actually were looking to trade the yen in either direction, and that would have worked out very well for us if you would have went short on the dollar yen, because the yen appreciated even more going into Friday, and it bounced back a little bit on Friday. You can see it had this little inverted head and shoulders pattern where it bounced off of. This is a big concern for the Bank of Japan with how strong the yen has been, but the yen has certainly been driving a lot of strength, as has Canadian dollar. Since we last saw each other, Canadian dollar has been actually very strong. Had a nice little retracement up in here and then drove some strength. And now it seems to be breaking into a new low. Let me pull the euro dollar back up in here. There we go. So first things first, there's a lot of potential opportunities today for different types of trades. I put this little the support level right in through here because it looks like the dollar yen is forming a double bottom formation right in through here. You can see it's starting to break out into higher highs with some dollar strength. You see the commodity currencies are doing very well. New Zealand's up against the dollar. Aussie's up versus the dollar, and so is Canadian, which is the trade that we're in right now. You can see the dollar starting to strengthen a bit after losing some steam versus the euro and versus the Swiss. And let's go back to the pound, because long term the pound is still, you can see this little inverted head and shoulders pattern on the pound long term. It's starting to come back up off of that. But until it breaks this reversal pattern, we talk about this quite a bit. Until it breaks this reversal pattern, we probably don't want to be bullish on the pound just yet. It has still been one of the weaker currencies across the board. So we don't want to go in any type of bullish stance on the pound until we see a sustained break above this long-term reversal pattern. When we look at this, let's actually go ahead and look at the pound on the PitView indicator right in through here. Even though it's a big week of news for the pound, if we go back to this, right back in here, From this swing high to this swing low, you can see the pound has already come up to a 78.6% retracement versus the dollar. I wouldn't be surprised if we saw a little bit of dollar strength today. We're trading into dollar weakness versus the Canadian. I'm not too concerned about that, but I wouldn't be surprised if we did see, some dollar strength today. And if we're going to see some dollar strength today, we should probably hedge our bets a bit by looking at the pound. So you can see that it's come up to this 78.6% retracement level, or it's skimming this 100% retracement level. I would like to see if we can see any type of reversal here on the pound. I would like to take advantage of opportunities of selling the pound once again. It's one thing that you have to like about it is the fact that the pound has appreciated about 140 pips from its low on the open to the high. The other thing that you have to like about this, besides the fact that it's in a 78.6, is if we are looking at this, you can see there's a divergence that's occurred as it's made higher highs. LP trend line's been going down, meaning there's been the bid and ask activity has favored more the sell side of the equation as it's been making higher highs. There hasn't been a lot of buying pressure on the pound. Those divergences have actually worked out very well for us in the past. So since we see this breaking up above this 78.6, instead of going or hitting on this 78.6, instead of going full-fledged into like a touch and close scenario, we know there's some resistance here. In fact, I'm going to take the 78.6 level off of here real quick. We see there's resistance right in here, right at the 42.50 level, which you can also call this the 78.6 level. We can see that intraday we have a little bit of a trend line that's formed right in through here. When you kind of connect up through these lows where the closes are, I'm going to take that off here right now because I think the level that you really need to look at is just right in through here. I like this little bit of consolidation. Maybe it's the fact that I was in Chicago over the weekend. I don't want to be too aggressive here, but if we look at what the indicators have told us, it's starting to go positive right in through here. However, if I would like to see it come down and close. If it can make a reversal right in through here, if I can get a close beneath this low, this most recent low. You could also look at the 4,200 level if you want. The 4,200 level would be right down in here. But if we can get in a little bit earlier, the 4,200 level or even a reversal off this level, if it can go -5, if we can get like a reversal on the from buying to selling pressure, and we can see this go like -5, that would be ideal. But certainly if it passes through the 4,200 level, that would be kind of our sweet spot for a reversal, because it would have a lot of room to go down. It depends on how aggressive you want to be. For right now, I'm going to put because of the amount of resistance, I'm going to put my support level right up in here, just off these lows. Since it's already moved 150 pips, if it does retrace back, I think that it could have some room to move. And if we want to be more aggressive on it, I think that we could look for a higher risk-reward ratio. A break of this low and a -5 on the 1 hour totals. You could also, if you want to be a little bit more conservative, you could look for a break of the 4,200 level. If you want to kind of be a little bit more conservative, look for a little bit more added confirmation. If it closes below this low, you could also look for a close below this low and a -5 on the 1 hour totals. Now that it's gone +5, I'm giving you a lot of options here. I'm just saying there's a lot of options. Everything kind of coincides with it breaking this low, though. Since it's already gone +5 here, actually, now that it's gone +5, really all we need to do is look for a negative on the 1 hour totals. If it breaks this low and goes negative, if it closes below this low and it goes negative, you could also, if you want to kind of combine things, a lot of options here. You could look for it, you could look, say, okay, if it closes below this low, I'm getting in. However, if it does start breaking the 4,200 level and it goes negative, I'm definitely getting in. Everything just coincides with it reversing, if you will. You can see it broke above 4,200 here, came back down and retested it, and now it's kind of just treading water, if you will. The stop, you would put 1 pip above the swing high. And then a limit on this one on the pound. If it does reverse, it'll probably reverse pretty well. You could look for a 1 to 1.5 risk reward. Go ahead and copy that. And this would be a dollar strength opportunity. We are selling it. It would be a selling into a retracement. And this is a retracement opportunity. So it's already hit the 78.6, or in this case, close enough. There we go. We're right at 9:30, so markets are now opening. Futures are up, so we're seeing a little bit, or opening bells right now, so we're seeing a little bit of appreciation. So let's go around. Dollar CAD is still kind of hovering. It's not, hasn't really gone against us by much, hasn't really gone below by much. Oil just passed above the 40 a barrel level, which is one of the reasons why I like that dollar CAD trade. Oil was unchanged, now it's up about 1%. And I'm going to go switch here to the yen. ABC on the Aussie, we can check that out. Let me check the yen here real quick, because the yen, we saw it kind of bottom out here. It's coming back to the downside. Even when the market's been up, it seems like the yen has been still selling off. If you read any news stories on the Bank of Japan, thing is that the yen, the thing I don't like, I don't want to go long dollar yen. You've seen this divergence happening right in through here. That's a little bit of a scary little divergence happening right in through there. I don't really want to go long dollar yen until I see it break up above this 109 level again. That would be the key level that I would look for on the dollar yen. You can see almost a perfectly formed, whether you look at the hourly chart, the 4-hour chart. The 4-hour chart shows the same thing. This double bottom that's formed right in through here. If you're looking long term on the yen, You know what? One thing that I would really look for, and I know that it would take some patience, but if it breaks out from this reversal pattern in here long term, that's when you could potentially see the yen make a big run to the upside. You know, it's throughout the week, last week, and going into the end of March, the yen's come down almost 700 points. It's been kind of the driving force of strength in the market since the end of March. It's been just, you know, just making all kinds of upward momentum. So, you know, the long term, this is something to keep an eye out for, is this little double bottom here long term on this 4-hour chart on the yen. If we can get a sustained break here, you know, it does, you know, things have been favoring more long dollar yen positions. It's been steadily making kind of higher highs in through here. Right now, you know, if we go on a 1-hour level, I don't really want to take chances going long. It could conceivably come up and, you know, and now that it's in the lower end of this double bottom, it could conceivably come up and hit the upper range of this 109 level. Or, you know, if it breaks down below 108, it could, you know, or the bottoms here, it could make more appreciation. It's just a lot of uncertainty surrounding that because the Bank of Japan, I know Kuroda, I don't know if he's talked yet, but there's some major concerns going on in the Bank of Japan about the yen strength right in through here. This would be kind of one of those times where you would look for the Bank of Japan to perhaps go into more of a, to possibly go into intervention mode on the yen and start unloading it. They can't really do it, but they're monetary easing right now because they've kind of extended it out so much that they can't really do it anymore. But intervention is certainly a possibility there. You know, even though the markets are up, yen is really not making a huge amount of headway there. Somebody mentioned the Aussie dollar. You are correct. Oops. Let me put the, hold on one second. Let me put this at the proper spot. A, there's a B. It's just broken up into a C. That's right at the 7,600 level. Well, Phil, the student has become the master. That's a nice little Gartley pattern. In fact, I would almost call that a perfectly symmetrical Gartley pattern. Yeah, damn near a perfectly symmetrical Gartley pattern there. Where's the trend line has been kind of coming down. I mean, overall, I mean, it's looking, from a sell standpoint, looks pretty good. Phil, this is a nice little read on your part on Aussie. Good job. I mean, I had kind of put Aussie out of the equation this morning, but gold has not been making the same appreciation that like oil is. And like oil is over 40 a barrel. That's one of the reasons why we like Canadian. You can see, you know, Canadian's been making headway to the downside. It's been, you know, we've seen Aussie and there's divergence in there, meaning just because we're short on dollar CAD, we're long one of the commodity currencies in the Canadian, it doesn't mean that there's not opportunity there on that Aussie dollar trade. Oil's been driven more off oil prices, or Canadian's been driven more off oil prices, which are steadily increasing right now. This Aussie dollar is actually a very nice little Very nice potential setup. It's +5 right now. However, so the market calmed down a little bit. Single bar touch and close off 78.6. So let's not go in on a touch. It's gotten right near it, almost close enough. It's gotten within several pips. If we can see it come up and challenge, it's gotten right up. This is right at the 7,600 level, by the way. So it's a pretty nice little opportunity. It's at a resistance level, 7,600. All these currencies as of late have been really looking at these round numbers. 76361. Stop would be 0.76391. It's great. Phil asks, is a good opportunity for a short. I think it's a great opportunity for a short. See where it goes from here, but if we can get a single bar touch and close off the 78.6, it's already gone +5. So if it goes negative on the 1 hour totals, even if it goes negative on the 1 hour totals from here, you could look to short it. You could put your stop at a really nice location, and if you wanted to, if you could do 2 lots, you could do a limit 1 of 1-to-1 risk reward. And a limit 2. We'll call it limit 2, 1-to-1.5, or a 3-bar reversal. That's a nice, good call there. Nice job, Phil. Big round of applause for Phil. Dollar yen we're gonna stay away from today. For right now anyway. There's some potential opportunities there on dollar yen. Just want to wait a little bit on that one. So keep an eye on that one. And if you have a winner on that, Phil just posted that you owe him 20% of your profits. Let's go check out and see where that pound's at. Pound's, I know, making headway here. Like I said, that pound is at the 78.6 level. It's recently gotten there, so yeah, it's a good potential opportunity there on the pound. We'd always obviously want to wait for it to come into some. I mean, even with this breakout here to the upside, we're not really seeing a whole lot of headway there on the pound. It's just hitting its head right there at 42.50. But thing about the pound is it's unlike the other unlike the other trade opportunities that we have. One of the reasons why you got to like dollar strength versus the pound, and to a lesser extent the Aussie on that bearish Garley, is the fact that like dollar Canadian just made its move. It had been consolidated. The pound has already moved up, what, 100 and, what was it, 120 pips or something like that, 150 pips, 160. So not only the pound is hitting its head right there, it's also kind of running out of, it has to be running out of steam because it's already kind of met its average range for the day. Just for giggles, let's go to euro, still making headway versus the dollar. The euro and the Swiss, just too consolidated for my taste. I mean, over the long term, Swiss is coming down. I know a lot of you like trading these. You know, the Swiss, they both favor dollar shorts, if anything. So, but you know, euro and the Swiss have both been, Swiss have been kind of making some steady downside moves, but it's been more consolidated than anything. If you look between the euro and the Swiss, you know, euro just sideways. So kind of staying away from these sideways currencies. One thing I do want to check out just for I want to check out this Aussie yen real quick. A lot of times when you see Gartleys form on underlying pairs, you can sometimes see them forming on cross pairs too, with the yen being so strong as of late. Yeah, Aussie yen, you see that, Phil? Aussie yen's kind of making that same little ABC. I would choose Aussie on that one because it would be the Aussie that would probably drive that. But just for giggles, I wanted to go see, you know, we do have an A approximately to 78.6. We have a B, we have a C, or I'm saying A that retraces 61.8. You got a B and you got a C that's coming up basically to 83.055. That's not a bad little play either. When you're looking at that, that's a Gartley. It's a Gatley. But Aussie dollar looks better, Phil. Aussie dollar definitely looks like a better, more symmetrical Gartley. Hitting its head a little bit right there. And it looks better on the long term as it's kind of risen up through here. As it's made some slight higher highs and higher lows, you got more of a divergence happening there. So that's a nice little call on the Aussie dollar. I like that one. Well done. All right, so where does that leave us here from this 45 minutes into class? So we got our bearish Gartley, which is dollar strength, pound dollar, which is dollar strength, and dollar weakness, which is our sell on dollar CAD, which is up about, let's see, what's current level? It's up almost 40 pips, or I'm sorry, 20 pips right now. So we got about 20 pips working for us on dollar CAD. Keep your head on a swivel today because of this. You never know what can happen with currency traders when they start getting fed anxious. But for right now, what we want to happen is we want oil to increase. Oil's up almost 2% now, which is leading to more appreciation on that Canadian trade. So that's a good sign for us right now. If we can get a little bit more of a bump in that, we may be able to easily hit our 1-to-1 risk reward. In fact, at this point, you certainly want to be looking at dollar CAD right now. I mean, we're almost up 30 pips. We got about 8 pips more to go until we're up 30 pips on that. So make sure that once that it's going to hit probably our halfway point on that trade. So you probably want to, once it hits the 29.10 level, you're probably going to want to go ahead and start trailing your stop down on the 3-bar reversal. You could even, if you wanted to, once it hits that 30 pips, you could even be a little bit more of a challenge from there, but you could even probably look for the potential on just moving your stop to break even if you wanted to be a little bit more tighter on your stop. But it's very close to getting to the halfway point of our profitability. So manage your risk on this one. You know, market could turn on a dime today based on the Fed having their little surprise meeting. And I mean that in the terms of dollar strength. But for right now, you know, definitely, you know, if you see any type of consolidation start to occur, if that doesn't hit your max profit, I would say you're definitely close enough with the 30 pips here to start moving your stop down using the 3-bar reversal. Right now we would have to reverse course by like 80 pips in order for us to get stopped out. So, you know, manage your risk on that. That's not necessarily you can almost call it an ABC, but it's down below the 78.6. I'm not too worried on that one. Manage your risk. That's a good place to leave things for right now. I don't want to go too aggressive here today. Dollar CAD's looking good. We'll keep that short on until they tell us not to. Go ahead and save my documents here. Go ahead and share those with you. Today is 4/11. And there you go. That's all I got for now, folks. Dollar CAD is at that, like I said, it's at that 29.10 level. That's our halfway point to our profitability. So again, don't take any unnecessary risks. You know, one other thing to consider, and I know there's quite a few of you on here that I know most of you in here, the PitView students on here, but you know, another thing to consider on dollar Canadian, I know I get this question quite often, is yeah, Aussie just hit the 78.6 level. So if you're short dollar Canadian, by the way, you can afford to be a little bit more patient with the Aussie dollar trade, because obviously you're already making profits on a commodity currency. So if you want to be a little bit more conservative on your entry for Aussie dollar, if you're already short dollar Canadian, you can be. Let's see here. Oh, I pulled up dollar Canadian on here. Another thing to consider, I get this question a lot from the PitView students, is, you know, is there another alternative we can use for an exit? You know, we trail our stops down. You know, since it's already been -5, now I wouldn't close out the dollar Canadian. You know, now I normally wouldn't do this unless something has hit a profitability level. You know, like right now we're at a 1 to 0.5 risk reward. So we've made up about 50% of our total take profit goal. But another thing that you can consider is if you look at these 1 hour totals, if it goes positive, don't even worry about it. You know, these bid and asks shift sometimes, and all it means is it may be going into consolidation mode. However, if it goes to like a +5 on this dollar Canadian, and you have some profitability in the trade, that's another thing that could give you an earlier indication to possibly go ahead and take your profits off. There's all types of ways to look at, you know, taking profits off in the market, you know, and closing out profitable trades. But certainly, you know, if the 1 hour total goes, you know, positive, I wouldn't look at that as a reversal. However, if that 1 hour total were to go to a +5, then yeah, you may want to consider closing that out. And I get that question often from PitView traders, like, you know, do I have to trail my stop using a price level, or can I use the actual PitView to tell me when to get out? And certainly the PitView giving you the alternative signal of going to like a +5 would certainly be a case for, hey, I should probably think about closing this freaking thing out. So just a thought. So anywho, things are looking good so far. I'm going to go ahead and log off here. Railroad question. Did they take the clickety-clack out of the rails? There wasn't a whole lot of clickety-clack. There was a whole lot of sideways like movement, but no, yeah, there wasn't a whole lot of clickety-clack on the rails. It was a pretty smooth ride, to be honest with you. I'm going to go ahead